Let's talk about how to file an extension for taxes. Of course, I'm talking here about individual taxes. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How you doing today? I hope you are doing fantastic. I'm doing marvelous. If you're to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today's conversation is about how to file an extension for taxes. I'm going to go through the whole process and break it down for you in 10 points. You can file an extension for your taxes by submitting Form 4868. 4868. So you submit this form with the IRS online or through regular mail. This must be done by the tax filing due date. So filing an extension for your taxes gives you additional months to prepare your return. No matter the reasons, you need the extra time. The IRS doesn't really care as long as you follow the rules. So I'm showing you right now on screen how Form 48 looks like. All right, what it looks like. It's with the link to where you can download it. So what is a tax extension? Let's just break it down. So the when some payers ask do I get an extension for my taxes, people are thinking that the taxes they owe should be they should get an extension on the taxes they owe and not the return itself, right? So an extension only gives you more time to finish the paperwork, not more time to pay. Very important. Let me just repeat that. An extension only gives you more time to finish the paperwork, not more time to pay. So your tax payment is due on April 15th or on the next business day if it falls on a weekend or holiday, right? So if you know you're getting a refund, you don't need to worry about paying when you're filing an extension for taxes. That's pretty logic. So the earlier you file your return, the earlier you will receive your refund. Makes sense. If you think or know you will owe, rather, that's another ballgame here. You want to estimate your tax liability and pay the amount due when you file Form 4868. So speaking about estimated tax liability, there is a form called ES1040ES. I'm showing it to you right now on the screen, as well as the link to where you can download it. So the thing here is that in the United States, in this beautiful United States of America, income tax remains a pay-as-you-go system. So if you are an employee, you pay federal withholding as part of every paycheck, right? But if you are self-employed, you might have to make quarterly estimated tax payments towards the amount you expect to owe the IRS, or you might have something called an underpayment penalty. And this payment should include both your income and self-employment taxes and are reported via Form 1040ES. One thing I want to say, and this is kind of important too, by the way, if you happen to live and work abroad, there is a special extension application you must use if you expect to qualify for special tax treatment. And you need to file Form 2350. And this extension, it's a Form 2350 extension application for U.S. citizens and aliens abroad. So in this show, we're only covering Form 4868, which applies to U.S. citizens and permanent residents located in the United States. So if you have a question about Form 2350, just leave it in the comment section and we'll answer promptly, usually within 48 hours, all right? So this is how Form 2350 looks like, as well as the link to download it. So the big question today here is that what happens if there is an underpayment of estimated tax, the ES? If you file the form and you complete the form and you realize you have paid less than you owe. All right, very simple. So as I already said, in the United States, we have a pay-as-you-go system, pay-as-you-go tax system. So you are usually required to make tax payments as you earn income. If you don't, you have a penalty for late estimated tax payments. So you should make estimated quarterly payments if either of this applies. So your employer doesn't withhold taxes from your paycheck, and or your withholding doesn't cover all your income. And the estimated tax payments are due April 15, June 15, September 15, and January 15 of the following year. So if any of this day falls, any of these days falls on a weekend or holiday, your payment is due on the next business day instead. So, in speaking about late estimated tax payment penalties, so when dealing with missed estimated tax payments, you want to always include any payment made after its due date in the total amount paid during the next quarter. Very important. Let me give you an example. Let's say your second quarter payment was due June 15, 2020, and you paid it 2 weeks after that due date. The IRS will consider this payment made in the third quarter. So you'll get a notice from the IRS informing you of any estimated tax penalties and fees. We also have, let's just talk now about underpayment of estimated tax. You might pay an underpayment penalty if both of this apply. Let's say you don't make estimated tax payments during the year, right? That's one option. Or the other, the amount you've actually withheld from other income is less than 90% of your tax bill. So the cool thing here is that you do have remedies. So to avoid an underpayment penalty, you need to make estimated tax payments if you have self-employment income, right? Or you have other income that taxes were not withheld from. The thing you have to understand is that the agency, the IRS, generally uses the system to figure out your penalty for late estimated tax payments. So when you file your return, the IRS will calculate how much tax you should have paid each quarter. And the IRS applies a percentage, what they call the penalty rate, to figure your penalty amount for each quarter. And the penalty amount for each quarter is total to come up with the underpayment penalty you owe. One thing I want to say here is that if you already underpaid your tax, one of your options is to let the IRS calculate your penalty. So you can let the agency figure out your penalty if you didn't withhold enough tax by the end of the year, for example, or let's say the exceptions don't apply to you, or you didn't file Form 2210. One thing I want to say here is that it usually will not cost more to have the IRS figure out the penalty if you pay the amount due by the date specified on the IRS bill. In certain cases, you might have to file Form 2210. We spoke about 2210 in another show, so I'm not going to go into get a little deeper here. Now, the question here is that we've been talking about underpayment penalty and estimated tax payment penalties. When does an underpayment penalty not apply? Because there are instances where that underpayment penalty does not apply. So the IRS will not assess a penalty if certain exceptions apply. So if you qualify for an exemption, I want you to pay attention right now. I want you to take a piece of paper and write it down. If you qualify for an exception, estimated tax payments are not the same as withholding. So there are exceptions to the penalty in situations where the penalty would not apply, including the total of your withholding and estimated quarterly tax payment was at least as much as your prior year tax. Number one. Number two, you had no tax liability last year and you were a U.S. citizen or resident alien for the whole year. Number three, you owed some tax last year and you had that amount or more of tax withheld from your paychecks this year. However, this is a caveat here. If your AGI, if your adjusted gross income was more than $150,000 or $75,000 if married, filing separately. So if your AGI was more than 150 or 75K, you must pay at least 110% of last year's tax. The fourth option, you had at least 90% of this year's tax withheld from your paychecks. Another exception, the number five, the amount you owe this year is greater than your withholding by no more than $1,000. And the sixth exception, you didn't have any withholding taxes and your 2020 tax is less than $1,000. So those are the six exceptions whereby you, if you fall in any one of those exceptions, if you qualify, the IRS will never assess a penalty. So you really want to go back into your paperwork and understand your tax matters and dig deeper and see if you qualify, because this could save you big money. All right? Let me just get right back after this. Right after this, don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation about how to file an extension for taxes. Now, number four, I just want to talk a little bit about whether it is possible to lower or eliminate the underpayment penalty, because a lot of people have been thinking about that, and they're just like, yeah, this should be possible. Now, if the exceptions that I just spoke about, the 6 exceptions, if those exceptions do not apply to you, you might still reduce the penalty you owe, or avoid the penalty altogether. Now, to do this, you must file Form 2210. Very important. Now, as you can see on the screen right now, we have Form 2210 as well as the link to it. This is a very powerful form, folks. You want to file Form 2210 if any of this applies. Your estimated quarterly payments were adequate and timely for your tax situation. For example, you owed $20,000 or $30,000 in tax, and you paid $5,000 or $6,000 every quarter, right? You generated a large part of your income later in the year. For example, you sold an investment in December and generated a huge gain. A large part of your tax payments occurred earlier in the year. For example, let's say you applied a large overpayment from last year's return to this year's taxes, or your filing status changed to or from married filing jointly. So if you married this year and both filed as single last year, you can usually combine last year's tax on your return and last year's tax on your spouse's return. So if you need more info here, you just check out publication 505. It's titled Tax Withholding and Estimated Tax, or you can even read Form 2210 instructions if both of these apply. Let's say you filed a joint return last year, or your 2020 filing status isn't married filing jointly. And so that's you can also file Form 2210 if you are a farmer or a fisherman and your withholding plus quarterly estimated tax payments are at least 2/3, 66.67% of your earlier year tax, your 2020 tax in this case, or a casualty or disaster occurred, making it unfair for the IRS to impose the penalty. So one thing that's very important is you need to attach a statement to your return to explain the casualty or disaster. This is very, very important. Another thing I want to say here is that if you are retired or disabled and your underpayment was due to a reasonable cause rather than willful neglect, this also could apply. Remember, you need to attach a statement to your return explaining what caused the underpayment. And so you can also avoid a penalty by changing your withholding, right? So let's say if you discover before the end of the year that you owe more taxes than you are withholding, you can file a new Form W-4 with your employer. So if at the end of the year you have withheld the full amount of taxes, you will not be penalized. This is very important. You will not get the same result by making an estimated payment, because in that case, if you make, let's say, an estimated payment late in the year, the date matters when calculating the penalty. So speaking about the penalty and estimated tax payments, can those be avoided? Can estimated tax payments be avoided? The answer is yes. If you meet specific criteria, and I'm going to break it down for you, you will not have to pay estimated tax payments for the current year if during the prior tax year you had no tax liability, your tax year was 12 months, and you are a U.S. citizen or resident alien. And if you have other income that includes W-2 wages, you might have to withhold enough to cover self-employment taxes or additional income taxes to avoid IRS estimated tax payments. It's very important. Now, however, in some cases, you might still need to make estimated tax payments. For example, let's say you receive a significant amount of taxable income not subject to withholding. For example, let's say you might make estimated tax payments for taxable income that comes from, say, stock sales, sale of a house that does not qualify for the exclusion. Let's say you actually sell a house that is investment property. If you have taxable income coming from interest, dividends, rents, right? Those are very important, and it's important to know because estimated tax due are, of course, they're due every quarter. So, for example, in 2021, you have April 15th, June 15th, September 15, and January 17, 2022. Now, please note though that if you're filing your 2019 tax return in 2020, your filing dates may actually differ from other years, and the dates change every year. But again, it's really around the 15th of the month. You can make estimated tax payments using any of these methods. Let's say you want to pay. You can apply your 2020 refund to your 2021 estimated tax. You can mail a check or a money order with Form 1040 ES, estimated tax for individuals. You can also use I will speak a little bit about that also later on. You can also use the EFTPS. EFTPS stands for Electronic Federal Tax Payment System, and this is what allows you to submit payments electronically. So you can visit EFTPS.gov, or you can call 1-800-555-4477. The number again is 1-800-555-4477. And you can make payments weekly, monthly, or quarterly. You can actually even schedule payments up to 365 days in advance. That's fantastic, folks. So, and you can also learn about credit card option at www.irs.gov. Remember though that you might be charged a convenience fee for using your credit card to make estimated tax payments. So the thing here is that when should you file? I've been talking about Form 1040 ES, and when should you file Form 1040 ES? When? You must make estimated tax payments and file Form 1040 ES if both of these two scenarios apply to you. So I think I already said that, but I need to repeat it here because it's very important. If your estimated tax due is $1,000 or more, right? Or the total amount of your tax withholding and refundable credits is less than the smaller of 90% of your 2021 tax liability, or 100% of your 2020 tax liability. Remember though that farmers and fishermen have different rules. So special rules exist for higher income taxpayers, and so this is something you need to be aware of. Your 2020 adjusted gross income might be more than $75,000 or $150,000 if married, filing jointly. If it is, you must prepay 110% instead of 100% of the 2020 tax. All right, and you'll need to do this to avoid a possible underpayment penalty for 2021. Another thing that I want to address here, and because we've gotten a lot of questions around that topic, is whether or not there is a penalty for requesting a tax extension. One thing I want to say is that no, there is no penalty for filing an extension. Filing a tax extension is not a bad thing, folks. It's not. However, not paying on time or enough, or failing to file altogether may cost you. So if you don't pay the full amount you owe, the IRS will charge you interest on the unpaid balance until you pay the full amount. If you don't pay at least 90% of the amount you owe, you might also be subject to a late payment penalty. The penalty is usually half of 1% of the amount owed for each month, up to a maximum of 25%. If you don't file your return or Form 4868 by the filing deadline, again, Form 4868, that's the form you use to file for an extension. All right. So if you don't do that, you'll be subject to a late filing penalty, and the penalty is usually 5% of the amount you owe for each month. For each month, folks, up to a maximum of 25%. So after you file the extension, you'll have until October 15th to gather your documents and finish your filing. So when you complete your return, you should include the amount you've already paid in the payment section on your Form 1040. In terms of filing extensions, you actually can file the extensions online, and the IRS in the last few years has done a superb job as making the taxpayers' lives easier. So Form 4868, as I said before, is the IRS document you complete to receive an automatic extension to file your return. The key word here is automatic. As soon as you file it, you get the extension right away, immediately, instantaneously. You can file a tax extension online in one of several ways. So the while you will not be filling out the paper form 4868 line by line, your tax extension information will be sent online to the IRS. So you can actually file your tax extension online on your own, right? You can start with an existing tax software tool. It can be H&R Block, it can be Tax Act, it could be Tax Act, could be TurboTax, right? And you can start with the one you currently have if you have an account with either of those software tools, or you can create a new one to submit your extension. So the program will ask you all the relevant questions so you can file your extension with the IRS. You can also file your tax extension with a Tax Pro virtually. So, for example, you can, if you have an H&R Block account, this is one of the services that offers that. And you can check more in our H&R Block review. We have reviewed the company, but you can work with an H&R Block virtual tax pro, for example, a remote tax expert who can submit your tax extension for you. So if you haven't started your return with your current software, you can just go to H&R Block, and they have a solution called Tax Pro Go, and that way you connect again. You just connect with the Tax Pro to determine if an extension is necessary. He or she will review your file first. And another option is to have a local tax pro file your extension. If you're not into doing it yourself, or you don't want to do it virtually with the remote tax pro, just contact someone locally, right? An EA, an enrolled agent, or a CPA, a certified public accountant. So you can work with that pro locally and explain your situation to them and have them help you. So before I close today's conversation, I just want to touch a little bit on how you can send the IRS your Form 4868 along with the tax payment. Very important again. If you owe the IRS money, but you're not ready to file your return, you might think that it's okay to pay your tax bill on time, but then file your return a few days later. Unfortunately, paying on time but filing the actual return late can set you up for unnecessary penalties. This is why you need to file the form. You gotta file the form so that the IRS will give you the much needed 6-month extension so that you can gather your paperwork. There are 3 ways to request an automatic extension of time to file a U.S. individual income tax return. So only 3 ways, folks. You can pay all or part of your estimated income tax due and indicate that the payment is for an extension using direct pay, which is the electronic federal tax payment system, or you can use a credit or debit card. You can also file Form 4868 electronically by accessing IRS e-file using your tax software, or by using a tax professional who uses e-file. I already explained that, right? And the third option here is that you can file a paper form. Yeah, there are still people using paper form, and this is pretty normal. No problem with that. You can file a paper form 4868 and enclose payments of your estimated of tax due. You can also pay electronically, right? So if you don't need to file Form 4868, and that's what a lot of people do. They just make the payments, because the IRS, once you make the payments, the IRS will automatically process an extension of time to file when you pay part or all of your estimated income tax electronically. So you can pay online or by phone. So the agency is pretty understand. They're very collaborative in that sense. So you have 2 options to submit your Form 4868. So you can mail in the paper IRS Form 4068, or you send the IRS the Form 4068 electronically through IRS e-file. So those are the 2 options. One thing I want to say before closing here is that, folks, if there is one thing you need to remember in this show, is that by filing the Form 4868, you are asking the IRS to give you 6 more months to gather your paperwork. However, make the payments. Whatever amount you owe, try to make the payment by the due date, which is April 15th of every year, or 17th or 18th or 16th, depending upon which date the 15th falls on. But you got to make the payment and request the extension. Simply requesting the extension doesn't mean that you have to make the payments later on. No. All right, folks. This is it for today. I really appreciate your attention. Thank you so much for your attention, and I will see you next time. Good luck, and remember, stay marvelous.